Hi, today we are going to speak about down payment. It is always a challenging time when you have to look for your first property in Canada, especially if you are a first-time home buyer or a newcomer. But it shouldn't be so complicated. And what is a down payment? The down payment is a lump sum of money that we give in partial payment of a big item, in this case, a house. To qualify for a mortgage, you have to have a down payment in Canada, and there are minimum down payments. So if your property, of the property you are buying, is less than $500,000, it's okay to give only 5% of the value of the property. But if your property is between $500,000 and $999,999, so less than 1 million, you will have to give 5% for the first 500,000 and 10% for the remainder of the 1 million minus the 500,000, so the other 500,000. So, and if your property or the property you are buying is more than $1 million, you will have to provide a down payment of 20%. And that will include the whole amount. It will not be escalated like in the previous cases. It will be 100% of the price times 20%. The advantages of giving a big down payment is that obviously you will have less monthly costs because your mortgage will be lower. The mortgage is the price minus the down payment, that will be the mortgage amount. And if you are given a lower than 20% down payment, you will have to pay also insurance for that mortgage. And that mortgage insurance is only covering the lender. It's not for your benefit, it's only covering the lender risk that if you cannot keep up with your payments, the lender will collect from the insurance. The insurance is not cheap and it will escalate. The lower the down payment, the higher the insurance cost, and it will be spread through the whole mortgage payments. So you will not have to pay all in one shot. You will pay month by month and together with your mortgage payments. How do you save for a payment? So we all have different financial situations, but normally the case is that obviously we have to save for quite a long time to come up to a big sum in our bank account. There are different advantages in Canada that allow us to use our retirement savings plan account up to $35,000 interest-free, and we have to pay them back after or during 15 years. So if you are saving, it's a good thing that you save in the RSPs, because the RSPs also have your tax refund, and you can make even a bigger down payment that way, because if you put 20,000 in your RSP, you will come up with the rate of 40% tax rate. You will come up with 8,000 more in your pocket because you will get a refund from Canada Revenue. And at the end of the game, you will come up with 28,000 that you can apply to your down payment. You have also the ability to use your TFSA or tax-free savings account. That's another account that is very good to use for down payment, because you don't have any limit to take out or put back, or you don't have ever to pay it back if you don't want. And also there are family members that can maybe help you out with gifts. In the case that your family is helping you with a gift, they will have to write a letter saying that they are helping you and that amount they are giving you is nothing about a loan or nothing that you have to pay back in the future. So when you qualify for your mortgage, all that amount is net of any other debt, and you will be qualifying for a bigger mortgage. In the sense of qualifying for a mortgage, it's important that you pay every debt possible before applying for it, because your credit record will be much better if you have no debts or little debts than if you have different loans and you are not going to have so much space for your mortgage. So the strategy would be to start planning with time, and you have to start paying out the debts first and then saving on your accounts. If you are making every year contributions to your RSPs, that's a good strategy too, on top of paying your debts. So you have to balance out the two strategies, and also don't forget to have a budget in mind, because sometimes we spend in things we like going out for dinner or spending in nice clothing or shoes, or vacation, and for a while maybe you have to restrict yourself a little bit until you come up with this big payment, which is the down payment. The benefits or the upsides of that is that you will be a homeowner, and there is a big pride on that. And on top of that, in Canada, prices have always been capitalizing very fast, so any penny that you are putting in your home, not only that you enjoy living in your own home, but also you have the biggest investment of your life probably, that will give you a lot of satisfaction. So it is a bit of a sacrifice, and there is a process you have to follow for sure, but there is an upside, that is that you will be a homeowner as long as you pay your mortgage. There is a portion of the mortgage that goes to interest. But I hope you enjoyed this video, and we are going to be posting more videos about that, and about how to come up with your first purchase, or even how to come with your first investment purchase in real estate. Thank you very much, and subscribe.